Hey everybody, Kimosabe here, giving you an update on the waves and what we're seeing here. Starting out on the weekly chart, we're just going to build a chart from scratch. Same thing that I usually do on a weekly, you may want to do the same, is measuring out this wick. Similar to measuring out this wick to find the opportunity there. We'll measure this wick and see if there may be an opportunity there. So let's measure that with a fib retracement tool. Just measure the height of that wick. We will mark off the zero point 0.5. That is at 97,638. So there's that. You can also see that it coincides pretty closely to these previous weekly closes. So that should be an important area if you do have an opportunity where price does come down there. Going into the daily chart here, can't help but think that this price action is not extremely explosive. You're still making an uptrend, so that's cool. But it seems like it's repeating this pattern right there, almost like two ABCs. So I want to measure those out. So I take the trend-based fib tool, and I will measure from that low to the wick high, and I will project from this low, these lows there, and we're getting pretty close to the one-to-one extension of that. So if those match, we may be repeating this leg down to this area. We may have a nice little $10,000 drop here early in the week to go test the median of that wick again, unless if we just start really cranking up there. But that is a target somewhere in the range of 107 to 109 if it does want to get up there. From there, don't be surprised if price does stop you out and come all the way back there, because you'd have an opportunity, and that's kind of all I'm projecting. So I'll draw this out in the chart, kind of thinking of this as three waves inside of here, kind of a hybrid of closing candles and wicks, but there's a three there. It could be valid. Same difference for here. There's three there. Working on three there. So then I would, if that does play out and you get moved down there, it may look something like that. And that would be, oh, I don't even know how to count that in Elliott wave, but I guess this would be your wave three. This would be a wave four, and then you'd be going up for wave five. And that wave five could accelerate quite a bit. Like you'd be repeating essentially these legs over here. Something like that, and then up. So you'd go up and then hover around here and then continue up. So then you would have, in Elliott wave terms, this would be an extended wave five in the third wave, and your target could get pretty high. On the daily here, so you have a high, higher low, higher low, higher high. This would still technically be a higher low if it does come here and grab this liquidity. Something to watch for around the 97,600 area, especially if we get up to 107.7 and then flush down $10,000 almost exactly before resuming upward. That would be poetic. And I would like nothing more for this thing to just continue pushing up very impulsively. But it's something to watch for an opportunity come probably by Wednesday of this week, if I had to guess. 4 hour still looking good at 105. See how high these candles can close. Right here, we can count this in Elliott wave terms. Doesn't necessarily have to measure properly, as things tend to not measure properly, but you could have a 1, 2, this would be 3, expanded flat for 4, and now you're working on 1, 2, 3, 4, 5. Some kind of 5 wave structure there. if it measures to the 1-to-1 of waves 1 plus 3, that could be a decent target where you'd look for potential rejection. Let's measure that. Check on that low. Get you to the 107.265 to 109 area. If you start getting up to the 112, then you'd have to readjust the count to that being wave 1. 3 is up there. Wave 2 is there. Your 4 is going to be up here, and your 5 is going to be much higher, 120 or so. So if price rejects at the 107 to 109 and then gives you this opportunity over here, you know what to do. Keep your stop where it needs to be, though. Your stop loss should probably be down here. But if it pushes up to the 112, then you could look for a 50% retrace of wave 3, if that does end up being a wave 3 up there at the 1.618. You'd look for some kind of 50% retrace of that. So I would measure this low here to a potential 1618. Then your buy setups would be coming at the 382 to the 0.5 Fibonacci retraces at 107 to 105 for a consolidation in here before another push up, if that comes. If this 4-hour candle ends up closing somewhere around 108 or something like that, and you see this pattern repeating over here, you can buy that with a tight stop loss and expect this to repeat up to the 112, and then maybe something like this repeats before another push up to 120 or something like that. But we'll take it as things go. But for right now, you still have higher highs and higher lows on a 4-hour chart. So higher high, higher low. If you get a higher high or higher high up there, your higher low would come in somewhere above the daily open, and you can continue pushing up. So maybe Monday, Tuesday, you might get some kind of flagging pattern that gives you another setup to enter. So that's what I got on the 4-hour. Just keep in mind, it's all about opportunities. Find your opportunities in the charts and manage the risk. So if I wanted to manage risk off of a flag pattern like this up there, it would probably be a stop loss at the daily open if price closes up that high. As soon as you get below the daily open, things become a lot more bearish, and you're likely to just come grab this liquidity. You may find support at previous highs, these wicks right here at 102.6, but that might just be for a bounce and then come back down again. So something to watch for. Previous all-time high, that may end up being support. 104 exactly. I don't like round numbers like that to buy. Usually they get surpassed. Usually they push past them. But watch for an uptrend to start on a lower time frame. If you find a 1-hour trend at support, 1-hour uptrend starts, take it up until the 1-hour starts turning down. 15-minute can get you in as well. And that's what I would look for at any of these areas, these previous tops. If you start getting an uptrend, you can take the trade off of that and take it back up, or down at the 97.6 area, start getting an uptrend, take it there, and then set your stop loss accordingly. Or set your stop loss down there, raise your stop as soon as you get some separation between your entry. So that's how you keep your stops tight. Let's keep this thing trucking. We'll see how much farther this goes. Watch the 107.500 area, 109, and then 112. 112 would suggest bullish continuation should be happening up to 120, in my opinion. So have a good night. Keep your stops tight.